Hello everyone, welcome back to my YouTube channel. I know I've been missing in action, but I'm back again with another brand new video, and I know you will love it. So first, I would like to apologize for not posting on the channel for a while, and the reason is not far-fetched. The reason is just simply that I've been busy with some other things that has really been taking not just my time, that has really been taking my attention. Yeah, so that's the reason why I haven't really made a video because I don't just like making videos, I like making videos where I can really put my mind and put myself into the videos. I don't just want to wake up and just, do a random video and all that. So that's the reason why you haven't seen me. So I've been getting a lot of DMs, not a lot actually, but I've been getting some DMs, people asking me, bro, are you good? Can we get another video? Can you do a video on this and that and all that? So I decided to make this video. So today we are going to be talking about top-down analysis. Top-down analysis is a very important topic in the financial market, be it Forex, crypto, the index market, the stock market, just name the market, top-down analysis, or like some people choose to call it multi-time frame analysis. But I like to call it top-down analysis because the name is just given, it explains itself. So let me just quickly define what top-down analysis is and why people do it. So basically, top-down analysis is when you analyze the market from a higher time frame down to a lower time frame or your entry time frame. So that is basically what top-down analysis is. You are trying to understand the overall or the major direction of the market, and you are trying to work your way with that bias down to your entry time frame. You want to get an overview of the market. You want to get a general idea of the market so that you will know what direction to trade towards. Remember, you don't want to go against the direction of the market. You want to trade in the direction of the market. If you are selling with the belief or with the confidence that the market is going to go down. And if you are buying with the confidence that the market is going to go up. So how do you know where the market is going to? How do you know the direction the market is heading to on the long term? That is why people do top-down analysis. So you want to have a grand idea. So it's as simple as that, and I don't need to beat on the point too much. So let's get straight into it. So today I was just doing my analysis for the coming week on GBP USD because as it stands now, I only trade GBP USD. So I was doing my top-down analysis for the coming week. So I decided to share with you guys. I hope you learn and I hope you enjoy this video. So let's get straight into it. So I like to start my analysis from the monthly time frame. Though I've seen traders that do the analysis and start it from the 3 months, which is the quarterly time frame. People, and I've seen a lot of traders do that, but personally, I like to start from the monthly time frame. So on the monthly time frame, what I'm looking for is not much because as you can see, we don't really have much data on the monthly time frame. So I just tend to focus on what is staring right at me through my screen. So as you can see, we just okay. Basically, what I just do is I just try to identify highs and lows because those are where liquidity points are. And I trade smart money. So when you trade smart money, you tend to focus more on the highs and lows in the market. So for me, the glaring eye that I can see here was this eye here. And why this eye, if you ask me? The reason why the reason why I'm focusing on this eye was because as you can see, this was the eye that broke this low in the market, and not just this low, it also broke this low in the market. So this is a very important eye. So if you want to draw your market structure or schematics or whatever you call it, you could just have something like this. Let me use my path tool. So you could have something like this, the market going back up, coming back down, creating this eye before we had this move that broke this structure to the left and also this structure to the right. So if we are to go by this market structure, we could see now that we are breaking lows on the monthly time frame. I'm talking about this price action here, this price action. Let's assume that this price action has not formed. So as at this point, we're breaking lows. So because we are breaking lows, our buyers would definitely be bearish. But look at what happened after that. Immediately after we broke this low, the market just reversed and broke this last high. So immediately we broke this last high, our market has shifted from a bearish market now to a bullish market. So once we see this, smart money trading, once we see this break of structure, the next thing to do is to identify your order block. And as you can see, for me, I identified my order block as this week right here. This week right here. All right. So that is my order block. So after the market has broken this structure, I was expecting the market to come back into this order block. And as you can see, it took a lot of months, started from 1st of June last year. That's like a year ago. It took the market a year to get back into this order block. But I'm not really interested in the nitty gritty. I just want to have an overview of the market. Remember, we are on the monthly time frame. So now we are back in the order block. This was the first candle that tapped into the order block or that stabbed into the order block, and this happened in May, just about 2 months ago. This happened in May, or yeah, that was last month. That was last month or 2 months ago, whichever one you choose to call it. So this was the first candle that stabbed into this order block. But when I saw this, you know, you would have been expecting the next candle form to be bullish. But look at what we had. We had the next month's candle, filling up the week of the month of May. We have the June's candle filling up the week of May. So immediately I saw this, I decided to use my Gantt box tool to mark out the equilibrium of the order block, the 50% level of the order block. So after marking that out, I was expecting the low of this current month, which is July. If the market is going to continue bullish, I was expecting the low of this month, to react into this 50% region before we start moving bullish. And so far, the month is still young, but so far you can see that that is what is trying to play out right now. That is what is trying to play out right now. So that is just all I have on the monthly time frame. We had our break of structure, we had an order block, and we are expecting a reaction. It's as simple as that. So the next time frame I go into is the weekly time frame. So what do I look for in the weekly time frame? I just look at structure as well, because it is structure that will guide you on how the market is moving. Structure is the skeletal part of the market. It is the part giving the market support, so to say. So as you can see on the weekly time frame, we had the market coming down consistently. We are creating lower lows and lower highs, lower lows and lower highs, all over the place. We've just been creating lower lows and lower highs. So, but I'm not at the moment, because I'm on the weekly time frame, I'm not really interested in what is going on right here. I want to look at the most recent leg of the market. So after seeing the most recent leg of the market, remember on the monthly we are bullish because the market is reacting from a bullish order block. But now looking at this weekly time frame, now what can we see? We can see that the market has broken this level of structure, which is this low right here. The market has broken this low, and after breaking this low, following the weekly order flow, which is bearish, we could expect the market, to come into this order block and possibly continue the downward movement. We can't say yet until the market gets to this order block and tells us what. Remember, as a trader, you have to be reactive and not predictive, because it's good to be predictive actually, but when the whole thing starts unfolding, you have to be able to bend your bias to what the market is telling you. You have to get constant feedbacks from the market. You have to respond and you have to react to what the market is trying to tell you, not just being stubborn and sticking to your bias no matter what. There are some cases whereby you can stick to your bias no matter what, but you shouldn't be too stubborn, you shouldn't be too rigid. A good trader is supposed to be flexible to whatever the market is trying to tell them. So now as you can see, we already broke this structure, and after breaking this structure, I identified this as my order block. This was my order block. I can extend it to this a little bit. So this is my order block. So now, right now, what I'm expecting on the weekly is to see the market, retrace back into this order block. And as you can see, it's also lining in confluence with what we have on our monthly time frame. Because on the monthly time frame, at least for the short term, we are expecting a bullish move first. So this order block on the weekly will be a deciding factor if the market is going to continue bullish. We want to see how the market is going to react from this weekly time frame, whether it's going to reject from it and continue the downtrend, or whether we are going to break it. But it's still far away. So right now we are expecting the market to come back into this order block after tapping into the monthly order block. So I believe that makes sense. If you have any question, please just drop it in the comment section below. So the next time frame I watch is the daily time frame. So remember, we are bullish on the monthly, we are bearish on the weekly. So now, looking at the daily time frame, we could see, what can we see? Let me remove this BOS marker. I don't like the fact that it's showing on the daily time frame. I like my charts clean. So let me do this. All right. Okay, so now as you can see on the daily time frame, we are also breaking lows. It's very similar to what we have on the weekly time frame. It's just that now on the daily time frame, we now have two points of interest or other blocks, whichever name you choose to call it. We now have 2 points of interest. So on the weekly time frame, we had the same structure, but we had just one point of interest. But now that we are on the daily time frame, we now have 2 points of interest that the market could react to and start coming back down. So that is just basically what we have on the daily time frame. And as you can see on the daily time frame, we broke this low, and as we broke this low, we identified our order block, waiting for the market to come back into it and give us, probably a reaction. It could come into either other blocks, and give us a reaction. Or worst case scenario, the market could just blast through this order block, and based on what we analyze on the monthly time frame, we'll just continue seeing bullish price action. So there's really no much details on the daily time frame, but as you can see on the daily time frame, I made a video on this particular topic. So as you can see on the daily time frame, the market closed bullish on Friday, closed bullish on Thursday, and you can see this Friday's candle is trading, or it closed above the wick of Thursday's trading candle. So this is giving me a sign of bullish strength. It's giving me a sign of bullish trend. Remember, I said when we are in a bullish order flow, we want to see lows manipulated and highs get broken. So you can watch my video on that topic. So as you can see on Friday, the market closed bullish above the wick of Thursday's trading candle. So that's giving me sign of bullishness. And we can also see all this rejection to the downside. So I could say expect the market to come into this other block. So let's see how many pips that will be. That will be like, let's say 50 pips. Or if we want to come 50% into the other block, that could be around 90 pips. So it's still something for you to look out for in the market. That would just be our first point of interest. But there is a high probability that this other block might fail. And the reason is because let's see if we have a 50%. Let me change this to SMC. So okay, the other block is actually lining with our 50% level, which is cool as well. So it's still a point of interest we can watch out for. But for me, I think this other block might fail. It's just an instinctive thought. So even if any other block is going to hold, I feel it's this one. This might just be a reaction. This one might just be a reactionary order block whereby you just get something like this. Probably something like this before we get into this place and see what's going to happen. So that is just what I have on the daily time frame. So now on the 4 hour time frame, what am I seeing? On the 4 hour time frame, what am I seeing? So on the 4 hour time frame, we could also see as well that the market structure has changed from a bearish market structure now to a bullish market structure. So everything is kind of aligning bullish. On the monthly, we've seen that the market has tapped into our monthly order block, our monthly bullish order block. On the weekly, we are expecting the market to come into a bearish order block. We are expecting the market to move up and come into a bearish order block and see reaction. And now coming on to the 4 hours, we could see that the market structure has changed on the 4 hours. So this is going to give me more confidence to start looking for buys next week. So now, why do I say, or what makes me say that the market is now in a bullish environment? So if we start to mark out our structure, we could see that we are creating lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. But all of a sudden, we created a lower low, and after a lower low, we expected a lower high, but that didn't happen. Instead, we got a higher high, and now this has just been the shift has just been confirmed with this last higher low. So now after this higher low, we are expecting the market to take out these highs, we are expecting the market to take out these highs, and continue the uptrend. So that is how I'm able to identify this as a BOS. And some people like to call this change of character. And what does it mean by change of character? What we mean by change of character is that this is the point by which the market changed character from a bearish character to a bullish character. So this point, we can refer to it as change of character, church. So that some people call it that, or you can call it BOS, whichever one you understand better. So now after seeing this, and after seeing the market reacting to this other block, I could expect these highs to get taken. So in fact, I was able to capitalize on this buy move on Friday. Yeah, yesterday. I was able to capitalize on this buy move. Yeah, but I closed my trade, I think, somewhere around this point because it had already met my target. So the next time frame I watch out for is the 1 hour time frame. So on the 1 hour time frame, what do we have? So on the 1 hour time frame, we could see structure also. We could see that the the change of character is clearer on the 1 hour time frame. You could see that this was the last high that took out this low. And after taking out this low, we took out the high. So that's a change of character, and we reacted into this other block. So what other blocks can we see in this leg? This, we know we have numerous points of interest in this leg, but this was the one that the market reacted into. So I'm expecting these highs to get taken. So while we are waiting for the highs to get taken, another structure is forming on the 15 minutes. So we go down to 15 minutes to look at the structure that is being formed on the 15 minutes. So on the 15 minutes now, we could see now that the market is now moving bullish. We had a higher high, a higher low, a higher high. We could call this a higher high, but we could call this a higher low. But let's use this since the market has already played out. So we could see higher highs and higher lows, higher highs and higher lows, higher highs. So after this higher high, we are expecting a higher low for the market to react into probably early next week before we take out those highs that we mentioned earlier. So now, as you can see, which other block am I expecting the market to come into? Actually, I had this other block marked out, this one right here marked out, but I think I refined it on the 5 minutes. That's why we had this small. So going down to the 5 minutes, I'll show you how I was able to refine it. So the last sell candle before the push up was this candle right here, but as you can see, the next candle did not engulf it. So the next candle did not engulf it, and there is really no imbalance sitting just right above the other block. So those are the reasons why I would prefer to refine it up to this candle right here. Some people might want to put their low, the low of the other block right on this week here. But for me, I don't want to do that since I already see that zone as a point of interest. I'm not looking to enter directly. I want to wait for confirmation. So I put mine right here. So I'll be expecting the market to come into this zone, react into it, and possibly wait for confirmation to go long. So that is what I'm looking at on the 5 minutes. So basically, this is the area where I'll be looking for price to come into next week. And if I'm able to get confirmations, I might long the market from this other block. Remember, I'm not just buying here just because of the 5 minute structure. No, I already have my top down analysis done, and that supports this bullish trade. Remember, we worked our way down. We did not just open up a 5 minute chart and start identifying highs and lows. That's a blind way to trade, but we are able to identify this setup from the monthly way from the monthly time frame. And as you can see, the monthly time frame momentum is supporting our buys. Not to say that this setup cannot fail, but it's a high probability setup because we are coming from a monthly order block and we have mitigated 50% of that order block. So same thing with the weekly time frame. On the weekly time frame, we have identified this as a break of structure, and we are expecting the market to retrace back into this sell order block on the weekly at least. Same thing with the daily. On the daily, we can see based on what I explained earlier that Friday's trading candle closed above the week of Thursday's trading candle. So that gives me the confidence that this market or GBP USD is going to come into this first order block, at least, even if it's to give a reaction or whatever. That gives me the confidence. So on the 4 hour time frame, we could also see that we had our change of character on the 4 hour time frame, whereby we have been coming down, the market has been trending down, but all of a sudden, we start breaking highs. And after breaking the highs, we had the confirmation of this bullishness after we mitigated this other block. And after we look at the move that the market used to come into the other block. Normally, with this kind of move, you expect the market to just keep going down. But look at the move, and right immediately after the move, we could just see the market reversing. So that gives me confidence that this move was just a false move, and a lot of people will be looking to sell from this other block here, and there will just be liquidity after we take out these highs based on my analysis. All right, so we could also see on the 1 hour that the market structure is now changing after reacting in this other block. We are beginning to print higher highs and higher lows, higher highs. So we are expecting a higher low for us to now continue buying. And on the 15 minutes, the same structure with the 1 hour, just that on the 15 minutes, I had this other block and I had to refine it on the 5 minutes into this smaller order block. So that is just basically it. So on the 5 minutes next week, what I'll just be looking out for is to see the market probably do something like this, come into the other block, definitely give me any of my entry confirmations to go long from here. And I can decide to target this H1 high, or I can even decide if I can decide to target this H1 high, closing majority of my position, and let the rest ride way up into the weekly highs, the weekly order block, sorry, the weekly order block that we had identified right here. But that's a far cry. That would be like how many pips? That would be roughly be around 464 pips, which is a far cry. I'm just saying. So that's just how to do a top-down analysis. And what is the advantage of top-down analysis, if you ask me? It gives you confidence. It gives you an idea of what the market could do long term. And let me to just show you what I mean by that, because after doing this analysis now, I save them on my Notion trading template or whatever. So I save them there so I can refer back to them during the week. So let me show you the analysis I had last week on GU. So this is what I had last week on GU. As you can see, this was the date 2nd of July. This was July 2nd, 2022. So per GBP USD. So I started my analysis from the monthly, obviously. So on the monthly, this was the chart I had. Let me just show you guys quickly. So on the monthly, in fact, as at last weekend, which is weekend last week, we could see that we had not had this 50% mitigation on the monthly time frame. This is the monthly time frame. We had not had this 50% mitigation. So I was anticipating the 50% mitigation of this monthly order block, and I noted it here. I said we are within a monthly OB, but yet to get 50% mitigation. We could get one last downward push to make the low of the month before the downtrend ends and we start a new uptrend. That was just what I was looking for on the monthly. Then on the sorry about that. Then on the weekly, I said we seem to have a high CI pattern playing out. We could see weekly low get taken out and further downward push. This was a possibility because the weekly was already, let me open the chart. The weekly was already bearish, and I could see that we are having this impulse correction impulse, and after the market coming back into this broken level, we printed this bearish engulfing, and as you could see, if I open my weekly chart, the new weekly candle that formed took out this weekly lows. It took out this weekly low. That was why we were able to get the 50% mitigation on the monthly time frame. So it played out. It played out. So that was what I had on the weekly. Then on the daily, the price has successfully retraced 50% on the weekly range. It's now legal to take out weekly low. That could strongly be in the books. That was exactly what happened on the daily as well. So as you can see, I had my fib from this high to the low of the daily leg, and we already had the 50% mitigation. So I was expecting this low at 1.19370 to get taken. Let's see if we took it. Daily time frame. All right. So as you can see, this was the low. One point. Let me check the price point again. The 1.19370, 1.19370, 1.193. I think it should be this low. Yeah. So as you can see, this was the low I was expecting to get taken out, and as you can see, we took it out. We took out those lows. And how was I able to predict that? It was because I was able to do a top-down analysis. So as you can see, I said it's now legal to take out weekly low, and we were able to take out weekly low. So let me just show you one more, which is the 4 hours, before I wrap this video up. So on the 4 hour, I said daily range has been breached to the downside. We could be expecting price to retrace into premium areas to sell from. However, we have a not premium area where price could react from. So we watch. So as you can see, this was the low that I was expecting to get taken out. But before the low gets taken out, I was expecting price to react into any of these 4 hour order block, whereby we have something like this before we take out the weekly low. So this was a strong what's it called now, supply zone that I was expecting the market to react into. But I had this one marked out in case, and this was the one that the market reacted into. Let me go to the 4 hours to show you that. So 4 hours, 4 hours, what is it, 4 hours? Was it the 4 hours now? Let me see. Okay, 4 hours, that's around 1.21500. 1.21500. 1.21500. Where is it? All right. So sorry, I was looking at this page. So this was the two other blocks I had marked out, if I'm not mistaken. I think I had this one marked out. This was the one I referred to as not premium. Let's refer back to the screenshot. Yeah. So this was the one. While this was the one I was really expecting to hold, but unfortunately, the market did not come into this premium one. It was this one. And after seeing confirmation, I was able to capitalize on a short, but I didn't hold the full short anyway. But I think I was able to hold it till we took out this lows right here. So this was what I anticipated. And the reason why I was able to anticipate that was because I did my top down analysis. So all this is just to emphasize the point, or just try to make you guys understand why it's essential to do top down analysis. So I was not hoping that this video would be long. It was not my intention, but now that we are already at 30 minutes, I think I will just have to wrap this up. And I hope you find this video educative. and I hope you find it interesting. If you have any suggestion on any videos you want me to make, or if you have anything you want me to clarify concerning this topic, top down analysis, please drop a comment in the comment box. And also, if you enjoy this video and you find it educative or entertaining, please drop a like on this video. Please watch our other videos and share with your friends. I would really appreciate that. So that will be all for now. See you in the next video. Bye and peace out.